So good afternoon, everyone. First of all, thank you very much for joining us today. I'm here with Donna and Philip. Donna from International Property Finance Group, and Philip from Brick Lettings and Management. As you've noticed from the adverts and everything else for the webinar, today's topics are specifically going to be on the UK market and how people can invest in property in the UK, being based in Turkey. I will just let you know also, myself and Donna will be in Istanbul from the 15th of April, so in a couple of weeks' time, and Philip also may be joining us. Just before I get going, Donna, would you just like to quickly introduce yourself, and then we'll go?
Absolutely. My name's Donna Spencer. I'm the CEO, Managing Director of International Property Finance Group, and we arrange mortgage finance for clients based all around the world looking to buy in various markets, UK being the most prominent one. So welcome and thank you for joining us today.
And Phil?
Yes, certainly. Good morning, all. Philip from Brick Management and Lettings. We're based within the UK. We do property management and lettings nationwide for overseas investors like yourselves. We've got extensive experience within the Turkish market, as we'll discuss later. Nice to be part of the event.
Excellent. Okay, brilliant. Right, well, thanks guys for introducing yourselves there. As I sort of briefly mentioned, the key things we're going to talk about today is the UK market and the performance historically and how it's performing. We're also going to be talking a lot about the process and how you can go about buying property. It is a relatively can be a relatively complex process, and that's certainly why we're here as sort of property professionals to guide and to help people throughout that and ensure that sort of making the right decisions in the right places and everything else like that. Donna will also give you a sort of an up-to-date view on the mortgage market, how you go about getting a mortgage, how an international buyer can do that, and the requirements and everything along those lines. And Philip then will also talk about once you own the property and once you're it's completed and you're ready to start earning some income from the property, Philip will be able to discuss the ins and outs on the lettings, the management, how he can look after the properties essentially for you on your behalf while you're based overseas, and obviously him and his team are in the UK to ensure that it is all running smoothly and giving you the income that you deserve. And I'll also use an example project that we have in this instance in Manchester, just to give you a flavour and idea of what sort of returns you should get, what schemes look like, and everything else like that. So, just about us as the RPA group and why we're here and why I'm sat here in front of you today. We are an international network providing access initially for developers to promote their projects overseas, and we have had clients from all over the world that look to buy back into the UK, and we offer our expertise to those clients and advice. The stages for the RPA group and how it works is, as you can see here on the screen, we start off with the research and the due diligence with the developer itself. We will then discuss and provide you with the sort of the investment advice, how it would work for you, how that all how you see the returns. Then the conveyancing process, we have partner solicitors, and we do also have Turkish speaking solicitors who are on hand then to explain the legal process. We then have Donna, who's here now, who offers the mortgage advice and services to give you the correct lending and lending advice. We then have Philip here as well from the lettings and property management, and also between ourselves and Philip on the resales. Ultimately, when you're looking to exit the investment and take advantage of the capital appreciation and everything else like that, we're on hand to help with that resale. But also it could link back the other way, and you could look at remortgaging another asset to buy another property, and it's all self-evolving, but also we are essentially at hand to help through every step of the process. So what I've put together are sort of 8 steps to sort of 8 steps to earning, essentially, which is I think a very simplistic way of looking at the process of how to buy property in the UK. So we start off with the research, as I just touched on before. We have that knowledge and relationships with the developers to ensure that we are identifying the correct properties for you and introducing them to you. Once you've gone through that due diligence, that research and understanding how it all works, you would then be able to look at the next step, which is the reservation process, which is when you're happy to proceed and you'd pay a £2,000 reservation deposit. You then would enter the legal element of the process, where you'd instruct a solicitor. As mentioned previously, anyone based in Turkey, we have Turkish-speaking solicitors who'll be able to assist and explain the sort of regulations and to ensure that that you're complying with UK law, and that you are, and ultimately from your perspective, that you're being advised legally that the process is right for you, and that you're able to purchase the property and it's the right property for you to buy, and there's no issues on that sense. We then move to an exchange of contracts, where you would typically pay your deposit, which would be between 10 and 20% of the value of the property. This can typically take from start to finish of the process up to 4 to 6 weeks before you would pay this 10% or 20%, and you'd only do that once you were happy with the other stages of the process earlier. And then essentially, once you've exchanged on a property, you legally own that property, although it may not be physically completed. Step 5, which we have already touched on, we'll go into depth shortly, is the finance element, where you're applying for a mortgage, and she'll give you an idea of what's available to you, how much cash you need to put into that property. To be honest, you'd actually probably get some of this advice earlier in the process as well, but it's the main point is just before completion, you would formalize your mortgage and your mortgage application and your mortgage offer, and then move on to the completion stage, where your funds would be drawn in, the property is completed, and you would physically own a completed property, which is then ready to rent out to the tenant pool within that area. Which then brings us on to Philip, who would then be finding the tenant for you, ensuring he's getting the maximum rent for you in that area, so maximizing the yield potential from that particular property, and ensuring that there's referencing the right tenants in place, they're able to afford the rent, and maintaining all the asset value. And once all these steps are completed, that's when we start seeing you'll start to earn, essentially as we've written here, and start to receive that passive income through the ownership of property. That's a very high level view and process, like step by step of purchasing a property, and there's obviously lots of intricacies in between each stage, but it gives you a good idea of the levels and how it works. Right, so I've sort of talked through the steps of the project and the processing of the property. Now, what we want to look at is, why the UK and why people are investing in the UK. And if we look back at sort of 2023, which was in terms of the UK market, certainly not one of its stronger years. As you can see here, we sort of probably saw an annual house inflation of sort of -1%, so we were just below sort of a sort of flat line in terms of property increases. But historically, if you look back at the UK market, house prices tend to double every 10 to 15 years. In sort of a 50-year span, we've actually only ever seen 7 years of negative house price growth across 50 years. So last year was actually a bit of an anomaly, really, when it comes to house price growth or lack of it. However, what we did see is a significant rise in rents. So although the house prices flatlined and were sort of just below the positive side of things, we actually saw rents increase overall by about 9%. So you can see that on one, especially when you're buying a rental property in the UK, you're playing with two increases, if you like. So you've got one of those is the increase from a rental demand, rental yield, also your house price inflation as well. So far in 2024, we're seeing a significantly different market. House prices have started to rise again. They're expected to rise by roughly 3 to 4% this year. The increased sales volumes has gone through the roof. And generally, all of this is down to sentiment and the fact that we've seen a shift in mortgage rates, and interest rates have sort of subdued and stopped increasing, essentially, that we'd seen last year. I think we saw 14 consecutive interest rate rises in the UK, but that seems to have slowed down now and stopped. And if anything, we're now expecting that to start falling off. So general outlook now is for house price growth. It's a good time to buy in that sense because we're like at the bottom of a cycle. And so people are certainly much more inclined to start buying again because interest rates are more attractive. And this just gives you an idea over the next 5 years of what we're expecting to see up to 2028. UK average is expected to rise by 17%. And then in particular areas, which we do focus on a lot, Northwest and Midlands, so 20+% in both those areas from a house price or a capital appreciation perspective. But then from a rent perspective, we're also expecting to see a 22% increase over the 5 years. So overall, a very strong. We, as a company, we're looking for the best opportunities within the country, and we at the moment really are on main areas of London, Birmingham, and Manchester, the three key locations. So I'm just going to use an example location of Manchester, as we do have 2 projects here at the moment. But what we're looking at, what's happening there at the moment, we're expecting above average or about what the average for the UK market in terms of over the next year, but over the next till 2028, so next 4 years or so, we're actually expecting probably the most significant increase in house prices is in Manchester, so 21%. Rents equally are looking very positive, and Philip will come on to this in a little bit more detail in a second. But rents in Manchester over the next year or so, looking at an increase of 4%, but again over the next 4 years or so, 21%. There are significant reasons for this in terms of the infrastructure that's going on within the city, how a lot of major international companies maybe aren't as focused as being in London as they are in other areas of the country, and essentially becoming a nice place to live, but actually a lot more affordable, say, than London. Now, what underpins this whole process throughout the UK, and the more you discuss this with us and everything that's going on, is this supply and demand issue. So we've got a shortfall in Manchester alone of 170,000 properties. That this is apparent throughout the country, but this is also that supply-demand balance with it is very significant, and what basically underpins house pricing and means we have a stable market. Like even in a bad year like last year where we saw significant interest rate hikes and things, the market didn't drop dramatically by any stretch of imagination, as I say, minus 1%. So you're looking at sort of essentially flatlining. Phil, can you just give us a quick overview on the perspective of Manchester as well, please?
Yeah, I mean, for the rental market in the UK over the recent years, sort of post the pandemic, has been very strong indeed. We've noticed across the UK rental demand has ever increased. There is a shortage of rental stock, generally speaking, available on the market. And the demand has been for, typically speaking, 1 and 2 bedroom properties. Some of the, obviously some of the stats on the slides there, you'll see that over the last 12 months, we've actually seen again significant rental increases on tenants looking to stay in the property, renew on. There's just a couple of examples there specific to Manchester, whereby a scheme in Oxygen Tower, just by Piccadilly Station, over the last 12 months, we've just increased the rental there by just over 15%. And at Old Trafford, again, slightly out of the city centre, but near the famous football grounds, again, you'll see that rental returns there very healthy, sort of increased by 19%. In terms of demand, the supply just isn't keeping up. We're finding that properties let very quickly, and I can't see that changing in the short term.
Okay, excellent. Thank you, Phil. So that's where we are from the rental perspective. So this particular project, as I say, is a good example. We have others, but this is just a very popular project in recent terms. I think when launching, it's now sold over 50%. We launched about five or 6 weeks ago now, but it's a project in the northern quarter of Manchester City Centre. It's called the Victoria North. Now, what's specifically very popular with this is it's between FEC, which is an international developer who are registered on the Hong Kong Stock Exchange, and with Manchester City Council. So it's a large, huge development, 15,000 homes. We're talking about literally just a small element of that. It's got huge regeneration. It's walking distance to Manchester City Centre. We're talking sort of, particularly from the particular project, sort of 5 to 10 minute walk into the city centre, right next to Manchester Victoria train station. So fantastic access all over the country, but also the tram network as well within Manchester. So very well located, an area of regeneration. So we're going to see significant house price growth, and overall just being very popular. But again, just showing our research and us ensuring that we feel comfortable with a location like this when we're promoting it with our clients. See, the finish is going to be high end. It's high quality finish with some floor to ceiling windows, wood flooring, high end amenities within the building as well. So you have gym, restaurant, workspace, and everything else like that. So high quality and high end amenities. So really attracting a good tenant pool. And just to give you, as I say, this is a very generalized overview in terms of figures and how it would work. But in this instance, I've just used as a case study a 1-bedroom apartment, 515 square feet, 545 square feet on the 13th floor. You buy this for circa £300,000. It's completing in 2027. But if we looked at it with a mortgage, an LTV of 65% and a 5% rates. Now, as I say, these change for each individual person and things like that. But just as an example, you're looking at an ROI over a 10-year period of 113%. How that works in a payment perspective for clients is There's a £2,000 reservation fee now. You exchange on 10%, as I mentioned earlier in the process. So exchange on 10%, so 4 to 6 weeks on £29,000, and then in 1 year's so 12 months after exchange, you pay another 10% of £29,000, and then on completion, which is Q1 2027, you pay the remaining balance for your deposits. So in this instance, another 15% plus additional costs. So you'd be looking at £62,000 in Q1 2027. So your total cash investment for this particular example will be £124,000. It's on a purchase price at 298, and that's including all costs. And that's what gives you the ROI after 10 years of 130%. Now, obviously, as I mentioned, I've given you some quite a high-level explanation of the process and how it all works. But then the detail is crucial, and to understand leverage and if you qualify and how that works, and ultimately how you're able to purchase these properties. Mortgage element is a crucial factor, and so I will pass over to Donna now, who will talk you through everything from a financial position perspective.
Thank you, Elliot. Firstly, I want to say thank you all for joining us today. It's really appreciated. I'm just going to tell you a little bit about us and who we are and what we stand for, because you want to know who you're working with. So International Property Finance Group was started by myself while I was based in the Middle East. I'm now based in Europe, but we're a family-run business, and we really take pride in caring about the client journey and making sure that we're building long-term relationships. We are directly authorised under the FCA, which means that we're not joined to a network. We go to the banks directly, and we've got very good long-term relationships with those banks. Me, myself, I've been in the industry for, I'm going to give away my age now, but I've been in the industry for over 20 years. I'll leave off the other bits, but over 20 years. But collectively, we've got experts within the business, mortgage advisors that have been doing this job for a very long time, all of high caliber, people that have been regional managers, FSDs for big corporate companies. So we want to make sure that when you're dealing with us, you're dealing with people that really understand the client. I've been an expat. I've lived abroad for many years now, so I understand what it's like when you're in another country trying to get finance on a mortgage, and that's what's important. So listening to the client's needs, making sure they're heard. Talking about the long term, it's not always just about the first property that you're buying. It would be looking to build out that portfolio if that's what you want to do, or what you're looking to buy that property for. So whether that's for a pension, whether that's for capital appreciation, and obviously RPA can help you to establish that property based on what you're looking to do. So it's about giving honest advice. We're never going to be the kind of mortgage consultancy that's going to lead with a headline rate. We'll look at not only the client, but we'll also look at the property. And that's why it's really important that we have a really good relationship with RPA and the team there, so that we understand the properties that they're bringing onto the market, so that we can go off, do the due diligence with the lenders, and we get sign off on that, so that when we look at the clients, we already know which lenders will be lending on those projects. So that's what we're about. We're about building really long-term relationships, giving good, clear, honest advice, and making sure that the client feels that we're taking you from one start to the end. Could you take us to the next slide, please, Elliot? So just on the lending, so as Elliot mentioned earlier, we're going over to Istanbul the 15th of April, and we'll be there for the week. But there's two types of buyer that's based in Turkey. So you've got Turkish national, or you've got your expat. Predominantly what we deal with are Turkish residents. So that would either be buying in a personal name or in a limited company. And that limited company will be set up in the UK. And there is lending available for both types of client. Now, lending is not just about the client, it will be based on the project as well as. So there's lending up to 75% loan to value. However, I always like to say to clients, err on the side of cautious. Let's go with think about having 30 to 35% deposit. That's a really good point. If we get you 75% close to completion, and Elliot just mentioned there that the Falcon is completing on the first quarter in 2027, then we would be giving you the 75, but always allow for that little bit extra just in case anything changes in the market. I can't control the lenders, I can tell them off and try and manipulate that, but the lenders are the lenders, so it's always really good to have a cautious attitude when you're looking at investment. So that's what we do with you. We're looking at loan to values, we're looking at income source, we're looking at the buildings, how many stories of that buildings. Some lenders are quite particular about what they'll lend on. So for example, one lender will only lend up to 6 stories high, another lender will lend up to 45 stories high. So things like that we consider for you. Property location, that's very, very important. And all these little things can have an effect on the loan to values. Okay, so that's what we take into consideration when we're recommending a product to the client. Okay, but that's our job. So we take all of that into consideration, and we work closely with RPA to go through the cash flows to make sure that those numbers work for you, whether that is 25% deposit or whether that's 30% or 35% deposit. That's what we do together to make sure that the unit that you're purchasing is right for you. Elliot, would you take me to the next slide, please? So mortgage rates. Last year was quite turbulent. I've been through I've probably been through about 4 or 5 turbulent, in my experience, turbulent markets when it comes to rates. I would say last year was up there. We felt a little bit like we had 10 rounds with Mike Tyson. It was every time you looked at the product, you'd look the next day and the product would be gone, and all of those little things. But this year it has been a wonderful start to the year. It's been very, very busy, and the products are stabilizing. So we've seen rate reductions, we've seen a little bit of a rate war with the banks, which is fantastic for clients, and we're starting to see those rates reduce. Now, where are we at the moment? The Bank of England's still at 5.25. The new norm is they're predicting around about 3.5%, and they're looking at, I mean, if you listen to some economists, they'll say as early as June you're going to see those rates reducing. We listen to Pamela Gordon, economist there. Simon French, he's an amazing guy. He's the chief economist there. He's saying around about August you're going to start to see those Bank of England rates changing. However, right now, you're looking, if you're a Turkish national, you're looking at rates around about 6.09, and that would be available to, or starting from 6.09, and that would be available to a limited company and to an individual. Once those rates start to reduce, you are going to see some more changes in the market. And with a project like the Falcon that's completing in Q1 2027, you would normally start your mortgage application 6 months before completion. Okay, so we can tell you what the rates are today. Love to have a crystal ball and tell you what they're going to be. We can tell you the predictions, we can tell you from our experience, but we will work with you to make sure that the cash flows are working in your favour, and whatever that loan to value and whatever that rate suits you. Arrangement fees have changed. I would definitely say that's probably one of the biggest changes that we've seen over the last 18 months, and that is the arrangement fees for the mortgage. So you can expect anywhere from 1,999 to anywhere up to 10%, and all of those costs need to be considered when we're looking at the loan. But that is our job, to work with you, be transparent, and show you all of those costs when we're looking for the right loan for you. So that's what we will do. Okay. Next slide, please, Elliot. Okay, and then they've got the typical documents. So this is one of the things that when we've spoken to the Turkish market and discussed, you know, what do you need to understand? It's about the documents that are required, the process. Now, we deal in various different lending markets, UK being the most prominent one that we work in. The documents that you need to provide don't really change too much. It's usually, if you're employed, it's usually your last 3 months' pay slips or a salary certificate, or your bank statements, your last 3 months' bank statements. Sometimes where documents will change will be, for example, if a credit report from the country that you live in, whether you need your latest mortgage statements, if you've got other mortgages in the background. So all of those things you will need to provide, but you will know about that from us when we start the mortgage application. So normally what happens is you do an agreement in principle. That could be as early as just after exchange of contracts, just so that you know that you can definitely get a mortgage. And then we will keep you posted and start the mortgage application in the right timing of completion, which is normally 6 months before. We discuss with RPA, we're up to date with any project that they're dealing with. We know when the completions are. So we would let you know when you need to start that mortgage application. And then we take that application from start to finish. These are just some of the documents that you're going to need to supply. So that's basically how it works. We arrange the valuation. We do all of that. If the project is being delivered slightly earlier, we'll know about it from RPA, so we can do what needs to be done with the mortgage application. If it's slightly later, we know all of that. So we keep in constant communication with RPA so that we manage the finance side from start to finish with you. Thank you. That's all I have.
Brilliant. Well, thank you very much, Donna. As you can see, Donna's very thorough and gives a comprehensive advice on purchasing so the property and using lending and leverage. Obviously, once now you've bought the property, the mortgage is all sorted out. The cornerstone to any investment is the tenant and the property being looked after. And so I will happily pass you over to Philip now, who will talk you through his side of the process.
Thank you, Elliot. Thank you. So thanks for obviously joining the webinar today. As mentioned, obviously we get involved at the point of where you collect the keys on your purchase. So your purchase has gone through and you have ownership. Brick Management and Lettings, as mentioned, we're based in the UK. We are specialists in lettings and management, and we offer a service right across the whole of the country, so nationwide, with properties under our management from the South Coast all the way up to Newcastle. For ourselves, you know, Brick Management and Lettings was really born out of being able to offer a hands-off, full sort of management package for investors like yourselves, typically based overseas. And our core values is really to maximise your investment return. So looking to rent the property for obviously the highest sum feasible, as well as ensuring obviously the occupancy to ensure there's minimal void periods. We have a very experienced team. I've been in the property industry for over 25 years, and several of my members of the team have also been in the industry for similar terms. So we have a very experienced and strong management and support behind ourselves. And, you know, again, for ourselves, we look after properties as if they were our own. So again, really to ensure that you're happy. It's probably worth noting for Brick Management and Lettings, we've dealt with the Turkish investors before, and I do actually have some Turkish members of my team that actually again can speak and communicate in Turkish with landlords alike. Next slide, if I may, Elliot. So, when speaking to landlords, everyone tends to have the same concerns or reservations in regards to who looks after the property. You know, when I've got it back in the UK. Rest assured, for ourselves, we offer a full managed service. We will look after the property right from day one. So when the sale goes through, we will collect the keys on your behalf. We will conduct a snagging report on the property to ensure it's delivered to you in A1 condition, the same as we would want our own properties to be delivered in. We would advertise the property for tenants. We would provide feedback on viewings. We would provide all offers received on your property. As a landlord, you can help specify as to the type of tenant you would desire to be in the property, and we will always adhere to meeting that criteria for you. Any tenant that takes a property on, we would do the reference to ensure you have a good quality tenant. So credit and financial checks, employment checks, accommodation checks. And when they're in the property, we would draw up and do the legal documentation. We would do the professional inventory reports on the property, collect the rental every month, sending that to a UK bank account or an overseas bank account, whatever you decide. And we would provide a full comprehensive statements. Being overseas, a lot of our landlords really enjoy our CRM system we operate on, so you can access at any time our portal, so you can look at any documentations, any receipts and such like at a time which is convenient to you. We would look after the property and do property inspections every 6 months. And again, share with you a report on that so you can see how your assets being looked after and maintained. Being overseas, most of our landlords will, of course, ask us to coordinate and facilitate the management of maintenance. And again, be assured that we have a 24/7 coverage. So should there be a leak in the middle of the night, there is a port of call for your tenants to contact, and we could ensure that your asset is maintained and protected. Next slide, please, Elliot. So obviously, I sort of touched on earlier, the rental market in the UK is very strong at the moment. The general sort of feedback, I suppose, is the fact that there is a shortage of rental accommodation in the UK currently. There's a substantial demand from professional and students, and we're finding, and again, just some stats there that, you know, to give you an idea on timescales, you know, how long will it take to rent your property when you get the keys? I mean, generally speaking, as an average of all of our portfolio, we can rent a property within 13 days of collecting the keys. When the tenants move in, they generally stay for a 1-year initial contract. 2/3 of those tenants will then look to extend on for a second, third year thereafter. So again, it gives you a good idea on the retention levels. For ourselves, most of our landlords will purchase for investment. A lot of them will be multiple landlords. So again, we're very aware and very familiar as to the requirements that you would be looking for. We're very proud of our reputation. By all means, the opportunity to take a Google or look at some of our reviews. But we would be delighted to obviously help you with your journey. Next slide, if you may, Edit. One of the questions I get asked by most landlords actually is, and I suppose is the concern, I suppose, when investors buy property is, you know, what happens if the tenant doesn't pay the rent? You may well have a mortgage payment to facilitate service charges, ground rents, etc. We, as a company, we've thoroughly referenced. So because of that, we can actually provide a rental protection product, which basically negates the risk of a tenant defaulting in payment. So in the event that there was the tenant experienced a change in circumstance, job loss, marital split, ill health, and they weren't to pay the rent, we have a product that would basically cover that. So for you, the landlord, you see no difference. Your rental income would continue to be paid, you facilitate, continue your financial commitments, and throughout that process, we could then be able to take back possession of the property, cover the legal costs, and ensure that at the end of the day, you have peace of mind of your income stream, and the fact that we can obviously get possession back on the property, ensure that there is no bump in the road for you. Again, I can talk to anyone else who obviously in more detail about the product, but I suppose in short, peace of mind that your rental income can be assured.
Well, thank you very much to both Donna and Philip for that. I hope that has given you quite a comprehensive sort of understanding of the process and how it happens, really, which is so important when you're looking into sort of investing in anything, really, in any market. Just a few sort of headline points I'd just like to make, really, just about the UK market in itself, just sort of looping it back around, really, is the security that we see with the market itself. We've all discussed the supply and demand fundamentals that we have there. I think, as Donna has touched on, really, sort of buying off plan at the moment is really quite a compelling investment case because of where we're seeing what's predicted to happen in terms of the interest rates dropping, but house prices are still relatively at a lower point now. Interest rates continue to drop. What we'll see is house prices continue to rise because more people get into the market. So basically creating a nice time to buy now that something's off plan. You don't need to get that mortgage today. You can get an understanding of what will be available potentially in the future. But the likelihood is we're expecting to see interest rates to be lower sort of in a year to 2 years' time. And generally speaking, if you'd like to get in touch and sort of discuss anything from all three of us in any detail, please do let us know. I'm just going to stop sharing now and jump on my own screen. So I'd just like to thank you all for coming. Just to remind any of you that are in and around Istanbul from the 15th of April, myself and Deborah there will be based in the Raffles Hotel in Istanbul. Philip may be or maybe not joining us. He's not sure yet.
The intention is, I will come out to yourself, obviously, on that one.
I think just one thing I'd just like to add in terms of experience with the market. You know, Donna's got helped buyers from all over the world and getting mortgages and everything else for buying in the UK, so has a vast experience in that. Philip actually has 12 plus years you've been dealing with Turkish nationals purchasing UK property.
Yes, indeed. Yeah, but many years. For, again, typically speaking, Turkish investors that are buying UK assets. And I've seen, obviously, with the currency fluctuations over recent years, is further encouraged, I suppose, the appetite.
Yeah, exactly. So, and then myself as well, sort of almost 20 years experience in the UK market as well. So we've got the experience and the knowledge here to really help you and sort of reach your goal ultimately of purchasing in the UK. We'd love to meet any of you on those dates then. I have just noticed, I think there may be some questions. Just let me quickly jump in here. Sorry, and I know we're sort of kicking on with time, but these, okay. This is Philip. What's the management fee? What percentage of rent?
So we offer a full managed service, and our fee is 10% of the calendar month rental plus VAT. So, for argument's sake, keep the math simple. £1,000 per calendar month is the rental. Our fee would be 10% of that, so £100 plus VAT.
Okay, great. Next question is also, what's the insurance fee percentage that covers rents?
So the rental protection product is actually an annual product. In terms of pricing, it's a fixed rate for the annual coverage, and it covers for a 12-month term. So if, should we say, let's say, for example, your tenant was in there for 6 months or 18 months, so it skews that 12-month sort of parameters. The new tenant that would come in would still be able to enjoy, obviously, the remaining 6 months left of that policy. The cost to that, it's a fixed price. It's £275 plus VAT, so £330 all in.
Brilliant, thank you. Next question, 15th of April to which date? So we'll be Monday the 15th of April till Friday the 19th we fly out. So we've got very busy 16th and 17th morning. So the 18th of the day is relatively free at the moment, and that's Denzi. Yeah, so 15th afternoon or 18th anytime at the moment is looking relatively free. There will be a link sent to you all where you can book in online. And then just final couple of questions. So tax requirements. This is quite an in-depth point, which is different for each individual. I think that's probably a better one, which we can take offline, and I can talk to you about it. I mean, essentially, you can either you have to pay tax is the short answer, one way or another. But there are ways to pay a smaller amount of tax, whether you put it into a limited company or you do it in an individual name, or there's tax allowances depending on passport and stuff like that. So tax is quite a big subject, which I'm more than happy to discuss.
Probably going to say as well, Elliot. I mean, obviously, a lot of the landlords, if they're buying in personal names, we will also, as Brick, we will help register them as a non-resident landlord with the HMRC here in the UK, which basically means that you would have the same sort of tax structure as such on your rental income as you would do for a UK national. Perfect. So we don't deduct from course.
And Ozan finally has asked about daily renting, like option of Airbnb. Some, not all, of our projects do have that available. However, Airbnb in the UK is becoming more and more complex, and it's something that when I'm talking to any client, obviously it can be particularly profitable, Airbnb. However, it does come it's all about day rates and it's ultimately more risk. Whenever you're considering this sort of investment, I generally say let's look at this from a 12-month, a standard typical tenant, so minimum sort of 12 months in situ, because and base your investment on that. If we can get an Airbnb short let option which generates more income, great, but let's base the decision to move forward on a standard rental agreement which we're much more comfortable with.
Just to add to that, we would need to know whether that was your intention from outset, because not all lenders will allow you to rent out on an Airbnb tenancy
it basically
unless they're aware of it. So there's a lot to be taken into consideration rather than it just be, oh, let's just rent it out on an Airbnb, because you've got to look at it from the lender's perspective as well.
Perfect. Okay, right. Well, I think that answers all the questions. Thank you very much for those questions. I hope we answered them significantly for you. As I mentioned, if you we'd love to see you in Istanbul, so please do get in touch. And any questions equally, if you aren't able to meet us, we can jump on a Zoom or have a discussion. No problems at all. But just like to thank you all very much for attending, and we will hopefully see you or speak soon.
Thanks, Elliot.
Thank you.